I'm Kate Monty, and I'm a co-founder of Evanston Mamas. We know that mortgage issues are a concern for many Evanston mamas during the time of the pandemic, so we spoke today to Evanston resident John Noyes of Loan Depot about issues surrounding mortgages. Hi, John. I'm Kate Monty.
How are you?
I'm well, thanks. Thanks for taking some time to talk to us about financial situations and mortgages.
Yes.
Especially during this weird time. So let's jump right into it. I'd like to talk about options for people who are negatively impacted by the pandemic. Maybe they are homeowners who are struggling to make their house payments because they're unemployed or underemployed now. If that's a case for them, what should they do? What's the first thing they need to do?
Yeah, so I think always the very first thing to do is contact your servicer. So whoever is collecting your mortgage payments on a monthly basis, that's who you should make your first call to, because they are going to be equipped with different options that you may have to either delay your payments or go or modify your loan terms to be more favorable to your situation. So that's always the first step. I will say that during this particular pandemic that we're going through, the CARES Act that passed through Congress, the $2.2 trillion bill that passed through Congress last month, provides for forbearance. Forbearance is really a tool that's been in a servicer's loan kit for a long time to help borrowers who are in that situation, who may have lost their job, to try and stem the foreclosure process. So forbearance has always been an option, and with the CARES Act that was just passed, it gives every homeowner who has a federally backed or insured mortgage the ability to request that forbearance process.
So when you talk about federally backed mortgage, is that just like a traditional mortgage you might have with your bank, or are we talking about FHA type of loans?
So both. So FHA and VA are both federally insured. So those loans will qualify, both FHA and VA. And then conventional loans, which are purchased by and securitized by Fannie Mae and Freddie Mac, those are what we call government-sponsored entities. So they're not necessarily federally insured, but they have the backing of the federal government. So those loans are also included in the loans that you can request for. What wouldn't be included would be jumbo loans. So right now, those are loans over $510,000. Those are not included in the CARES Act. Although I will say that if you're in the same situation where you've lost income and you can't make your payments, I would also call your jumbo lender as well, just to find out if they're willing to work with you as well.
Okay, so when you talk about forbearance, I'm assuming that you mean like deferring payments. And how long are people able to do this?
Right. So the CARES Act, which is now federal law, it stipulates that any homeowner with one of those loans can request forbearance for up to 180 days. So I want to make sure that we're kind of using the right terms. Forbearance is the correct term. It is deferring your mortgage, but it's not technically called that. So if you're a homeowner and you're calling your servicer, you want to ask them about forbearance. But essentially what forbearance is kind of a pause button. It doesn't mean that you don't have to make those payments. Those payments are going to be due at some point. So to give you an example, if you talk to your servicer and agreed to a 3-month forbearance, then at the end of that 3 months, you would owe that money. There's been a lot of confusion about the mechanics of that because, quite honestly, it wasn't really spelled out concretely in the act. So there's been a lot of misinformation about that. Initially, the only option that servicers were offering was for a lump sum payment at the end of that forbearance. So to give you an idea in that example, if you deferred your payments for 3 months, the only option available at first was for when that 4th month rolled around, you would have to make your regular mortgage payment plus a lump sum payment for the 3 months that you had skipped. So that was obviously onerous for someone who's lost their job. And so there was some more clarification on that both Fannie and FHA, Fannie and Freddie and FHA have said that, that a lump sum payment is not required, that you can work out other options. So it really, unfortunately, it really depends on your servicer on what they're going to be able to offer you, but that's kind of what's going on right now. And so you've either got what I just described, which was that balloon payment, where you make the lump sum payment when that forbearance is over. You can also then you can now, instead of that, they've offered some different options, which include a repayment term. So taking those months that were kind of paused and skipped, and taking that lump sum and spreading it over the course of time. The other option would be a loan modification, which modifies the terms of the loan. And then a last option, which I've heard is available, although I haven't heard anybody offering it necessarily, would be to defer the loans until the very end of the loan period.
What does the CARES Act say about how this might impact a person's credit or payment history if they do need to take advantage of this program?
So the good news is that there is no effect on your credit from the guidance that we've received. So lenders will not be recording any late payments. It will show on the credit report, it will show that the loan is in forbearance, but there's no negative association with that. So it's not hurting your credit score per se. I wanted to go back and actually clarify something a little bit. So the CARES Act provides for forbearance for up to 180 days.
Mm-hmm.
There's no requirement for proof of hardship. So all you have to really do is ask for this, and they are required to give you the options. So it's for 180 days, and then at the end of that 180 days, you can request an additional 180 days. So technically, there's a full year to go into forbearance if you wanted to do that.
Is there anything else that people should know about their mortgage as it pertains to the pandemic or the CARES Acts that maybe we haven't already talked about?
So I think that there's, one of the things that we're looking for a little bit of clarification on, and I'm assuming that this will work out positively, but at this point, it's unclear. But right now, there's what's called a master servicing agreement with Fannie Mae. So if a lender is servicing a loan, and just to clarify, if I'm making my mortgage payment to Chase every month and I have a Fannie Mae or a Freddie Mac loan, in reality, I'm making that payment to Chase, but they're taking a small portion of that and forwarding the rest of the payment on to Fannie and Freddie. So they just get a small percentage of that money, and so they're the servicer, but they are required by law, if somebody does go into forbearance, that they are on the hook for paying the principal and interest portion of that mortgage payment for at least the first 4 months. So there's a lot of, it's pretty onerous on mortgage servicers as well, because when the borrower is not making those payments, they're still having to forward those payments. I can't remember the last part I was thinking about there.
What happens to if you have rolled your property taxes into your mortgage, or you have they pay your homeowner's insurance, for example? What about those parts of the payment that won't be going through if you've taken the forbearance?
So so when you are in forbearance, you still don't have to make either the principal and interest or the taxes and insurance portion of it. The servicer is on the hook for making the tax and insurance payments for you throughout the term of your forbearance. So I had mentioned the 4 months originally that they are required to pay principal and interest payments. If you went into forbearance for a full year, that servicer is on the hook to pay your taxes and insurance for you as well. And then obviously that's going to be tacked to the end with any kind of repayment plan or balloon payment that you're going to have to make.
Okay.
I did remember, I wanted to say that the negative aspect that we're trying to figure out here is right now the master servicing agreements with Fannie Mae indicate that if someone is in forbearance, in order to get another Fannie Mae or Freddie Mac loan in the future, they'll be required to bring that forbearance current, so make all the forbearance payments, and then have on-time payments for a full year before they're eligible to make to get another Fannie or Freddie loan. And so that's potentially a situation where some homeowners might miss out on what we think is going to be a really good refinance market here with rates remaining low or maybe going lower for the foreseeable future for quite a long period of time. So we're trying to get some clarity on that. I know the Federal Housing Finance Agency, which oversees Fannie and Freddie, are indicating that they will probably try and waive that so that somebody can get a mortgage. But at this point, that's a negative effect of forbearance.
Okay, so you were talking about how the rates are potentially going to be really good. What is the current rate?
So I get in trouble if I quote rates specifically,
Right.
but just because there's so many different factors that go into that. But I will say that we're in the very low 3% range for conventional loans for 30-year fixed, as low as I've ever seen them.
Okay. So how has the lending environment changed as a result of the pandemic? It seems to me like you're saying that all of these mortgage companies are on the hook for not just the mortgage, but they've also got to continue to make those insurance and tax payments for up to a year. That feels like that could potentially really stress the whole infrastructure.
Yeah, the infrastructure has been stretched to the max, and there's been a lot of rescue efforts in the last 6 or 7 weeks. Things have changed dramatically. What we saw towards the beginning of March was a pretty broad range sell-off in all assets. So the stock market was selling off at the same time that mortgage-backed securities, which are bond instruments that inform our interest rates. So those are securities that are sold based on a big clump of mortgages. So they lump a bunch of mortgages together and sell those securities. So those markets were all selling off at the same time, which drives our interest rates up. So we saw a big spike in interest rates in the beginning of March. And that was because really all investors in mortgage-backed securities left the market. So they weren't purchasing those. And so the Federal Reserve has stepped in and is really the only buyer in that mortgage-backed security market. So they're spending literally billions of dollars a day to purchase mortgage-backed securities and keep those interest rates at a low point right now to help homeowners kind of get through this process. That's made the conventional side of the market pretty healthy. FHA has had its issues as well. We had a lot of the forbearance activity at the very beginning was in FHA loans. So that market got a little spooked by the fact that a lot of people wouldn't be making their payments, and so those rates kind of went up a lot, and then have really been tempered a bit. So that's been interesting. And then the jumbo market, which is above 510,000, that market has really largely evaporated. There's only a few players in that market right now. Those loans are securitized just like Fannie and Freddie and FHA, but the buyers of those securities are generally real estate investment trusts, which took major hits at the beginning of March. So those investors have kind of left the market, and as a result, all the lenders that originate those loans have really pulled back on originating or increased their guidelines so that they're only really taking the cream of the crop as far as borrowers are concerned, so that they aren't concerned with those for those homeowners going into foreclosure.
So for not jumbo loans, so I think you said that's under $500,000.
Yeah, 510,000.
Is the pandemic, if you were thinking like, wow, we had planned to look for a house spring 2020, our first home buying experience, how's this going to impact first time home buyers?
It really depends on what kind of mortgage you're trying to get. If you're looking at conventional loans or FHA loans, there's been a lot of support for that. So those rates are great. Those guidelines largely haven't changed. FHA's changed a little bit, but otherwise I think it's largely the same. There is some additional background checks that we do. So typically we will verify employment during the process, and a few days prior to closing, call the employer and make sure that you're still working. That's really come forward to, we're doing that day of closing now. So those kind of things are changing, but I don't want you to get the impression that that lending's dried up. It's definitely out there. There's some restrictions if you're in the jumbo market per se, but otherwise, I think all other areas of the market are pretty healthy, and you should be able to still qualify like you would have 3 months ago.
Okay. So what about people who maybe even 3, 4 months ago, they don't have the greatest credit, or they're kind of struggling to get in this market. Does it feel like people are going to be really scrutinizing credit history more now because of the pandemic and how that's affected the industry? Or what would your advice be to someone who wants to, they want to buy a house, but maybe they don't have stellar credit?
Right. I mean, I always feel like the best thing to do in that situation is get in touch with somebody like myself who can take a look at your situation and guide you through your current situation, what your options are at the moment. And if it's not something that meets your needs, that's a good opportunity to review the credit and find out what things we may be able to review with the creditor and remove to increase that credit score. You can kind of game plan for repayment of some debts in order to increase your credit score. But I always feel like consulting with someone, with a loan officer is the best first place to start. There's no obligation and there's no fees to do that. So in my mind, obviously knowledge is power, and to talk to somebody and find out what your current situation is only going to be helpful.
Now that we're all kind of stuck in our homes and we're having meetings like this over Zoom and not wearing pants, I don't know. What about people who were already in the process of buying a house and closing on a loan? How are they even going to be able to close on that loan? How are these closings working?
Well, it differs by title company, but I will say that most title companies have instituted really strict policies as far as who's able to attend the closing. So typically, I love to go to my closings. I love to meet people. Oftentimes, it's the first time that I'm meeting someone is at the closing table, and so I love to go to those closings, but I am not allowed at this point. Before it would be me, it would be the buyers with their attorney. The buyer's agent, the seller's agent, the seller's attorney. They're all crowded around a table. That's just not feasible right now. So a lot of companies are restricting who comes in. So it's restricted to the attorneys and the buyer, no agents, no lender. So we're not allowed in there. But I will say that a lot of closings right now are happening curbside. So the title company is running documents out to somebody in the car who's signing documents and running them back into the title company.
Wow. Well, that actually sounds good, because I feel like my closing was a laborious 2-hour process of lots of photocopying and signing. So maybe that's the silver lining in the cloud for the.
Yeah, you can listen to XRT while you're doing your closing in the car.
Exactly. Well, I don't know that I have any further questions about this. You've given us some great information, and I do really appreciate that you took the time to share a little bit of your expertise with us.
You bet. Yeah, this is great. I mean, there's a lot of misinformation about forbearance, and it's not anybody's fault just because there was no real clarity on it. So it's a great outlet to have there. I will say that if it's built there for people who lost income and are having a hard time meeting their obligations. So if you're able to make your payments, I would urge you to do that. That's the best situation to keep yourself in, and then that reserves this right for some people that really need it. But it's great that it's there for people.
You know what? I will do a little follow-up question with you because something just occurred to me. What if a scenario where a couple, both of them, get laid off? So they do take a forbearance. One of them is able to go back to work, and they might be able to make that third payment. If they missed 2, or they had forbearance on 2 payments, they go back for the third. are they able to take another forbearance if something should happen again? I mean, we're talking about perhaps another shutdown in the fall. We
Right.
just don't know. It's so up in the air. Is that something that you can kind of travel in and out of as you need? Or is it, look, you have one chance, do it?
That's a great question. I don't know the answer to that. I would guess that if you brought your forbearance current, if you in your scenario, if you in the third month started making those payments, and then you made those deferred two payments, then I would think you would have an option to go into forbearance again. But I would guess that you would have to clear out that first one before you could do another one.
So in other words, if that even looked like it was a possibility, it might make sense for that person, the half of the couple that could return to work, maybe they should bank that money and continue their forbearance until they are sure they're on solid footing.
Yeah, that's probably a really good strategy in that situation. Yeah.
Okay. I think that covers it.